It's the end of summer today, which for European markets could herald a more turbulent autumn, especially if the ECB disappoints next week. I'm Jamie McGeever and this is today's Market Pulse. So let's take a look at how some key assets performed in August and how they're likely to perform in September. Joining me is Reuters correspondent and European writer of our flagship Global Markets report, Richard Hubbard. Richard, last day of the month today, and it's been a pretty quiet month, has August. But under the radar, some assets have done pretty well.
Yeah, that's right. And they're some of the more obvious ones if you think about all the talk we've had about quantitative easing, both from the Fed potentially and more assistance from the ECB coming up. The big gainers, gold, oil, and surprisingly, perhaps the Eurozone banks, obviously getting some support from Draghi's comments about doing all that he could to fix the Eurozone crisis.
Eurozone banks up 12% in August, although you might argue 12% of not a lot is not a lot.
That's true. Equities in general, though, have had a reasonably good month. People are sort of treading lightly back towards that market, still nervous about some of the risks ahead, but certainly looking for opportunities in that area.
And our asset allocation poll for the month of September showed that global investors, their holdings, their exposure to equities is the highest in 4 months.
Yeah, that's right. It's a sign that, as I say, people are looking for yield. They're looking for returns. They're looking for even a bit of safety, really. Big companies, you know, the major companies rather than small companies, are doing better, and it's because there is still growth out there, and these companies that are gaining are most exposed to it.
The flip side to that, of course, is the asset allocation shift maybe towards equities is exposure to Eurozone government bonds in particular. Sovereign bonds is extremely low.
Yes, it fell in that last survey, as you know, but a lot of this is about US funds cutting back their allocation to Eurozone debt. I think Japanese funds, European funds in general, mostly kind of steady on the month while they wait and see how this Draghi plan pans out. But yeah, US funds, they're just not convinced and they're still pulling out.
And yeah, global holdings of Eurozone government bonds, the lowest in over 2 years. You touched on it earlier there. If you want yield, but you want some corporate exposure as well and growth exposure, you could do a lot worse than highly rated investment grade corporate bonds. Yeah,
this is the message a lot of fund managers have been pushing for a while, and they seem to be backing up their words with actions. There's also, it seems like the companies themselves are confident enough to go to the markets and issue more debt. It's being well received. Those same companies, cash rich, chasing opportunities in emerging markets. It's a story that's working for everybody. And yeah, I think this one's going to keep going.
From what you're hearing from investors and traders, are we in for the big crash that many, well, some, are calling for in September?
Well, you have to say there's a lot of risks on the horizon in September. It's a packed month of events, from the Fed meeting, even today's Fed speech from Chairman Bernanke, next week's ECB meeting, so crucial, a Eurogroup meeting. There's issues to do with Greece and Spain still looming on the horizon. I mean, a lot could happen, but you know, it's going a long way to predict a big crash at this point.
Correction, not a crash.
I would think so, potentially a turnaround. I mean, there are people on the sidelines waiting to put their money to work, so let's wait and see.
Okay, Richard, thank you very much. My thanks there to Reuters' Richard Hubbard. That was Market Pulse, your daily fix of what's moving on financial markets and why. I'm Jamie McGeever, this is Reuters.